This is the first video in the 100-day series of Indian Economic Service revision. We will discuss all important 100 topics for the 2026 Indian Economic Service examination, under which the first topic is inflation. Now, this is not a very common topic. Here we will be discussing inflation with the perspective of answer writing, not with the perspective of information-based lecture. My name is Sanay Srivastava and I welcome you on the platform of Ecoholics. First of all, the Indian Economic Service examination is in the month of June. Daily, we will be giving you the video where we will sort the topic for you, the important ones, and what exactly you need to read so that you can reproduce in the examination hall while writing the answer. The biggest challenge that I always listen from the students, I always hear from the students in my classes and the test series is that they are able to collect the information, they know the topic, but when it comes to answer writing, when it comes to recalling the topic, they go blank. So that is the main problem that we will address in the series of these videos. The series will be in pure English language so that everyone can understand, because the examination is also happened only in English mode. This examination is for postgraduate economics students. Whether you are appearing or you have finished your post-graduation, you can appear. But I would recommend, highly recommend, that if you are in your last semester, you should attempt this examination, because that is where you are in the momentum of studying. For 4 semesters, you have been studying economics, and that momentum you use in the month of June. Okay, so let's start today's lecture. Those who are serious about this examination, Indian Economic Service, I have a very important test for you. It's absolutely free. Psychometric test where you will understand everything about this exam. There are 50-55 questions, 10 to 12 minutes it takes. Okay, what you have to do is you have to send a message on this WhatsApp number in your screen, or I'll show you in the description as well, and they will send you the test report. You will get on your WhatsApp message. That detailed report will give you in and out about your preparation. So fill those questions honestly to get the honest report with you. And if you have any doubt, concern in that report, you can discuss with me personally. Okay, so let's start with inflation in India. What we'll be discussing is meaning, types, causes, effects, and control. These are the areas where UPSC have been making questions. I hope you are following our short series as well, where I am telling you the concepts and the question answer format as well. So make sure that you follow on the YouTube shorts and Instagram reels as well. Okay, now let's understand this. Simple. Inflation. What's the meaning of inflation? Inflation means sustained rise in the general price level. Okay, the important thing here that UPSC requires you to understand and explain is that the general price level. So if you write a generic definition, you will not get marks. But here, if you miss major terms, then also you will lose marks. Like for example, a tomato prices increases for a week in certain section. That's not inflation. Okay, inflation is sustained. Sustained means for weeks, for months, and almost all over the places. Okay, like you see, inflation means sustained rise in the general price level. So not in one commodity, not for a particular time period. It reduces purchasing power of the money. What does it mean? In simple sense, like for example, the 100 rupee, your 100 rupee note 10 years back used to buy milk, vegetables, and certain necessities. But right now, that 100 rupee cannot buy the same commodity. It means your money is losing value. That's what we call the purchasing power of my 100 rupee. If inflation is there, it reduces. Okay. Next point is inflation is one of the most important macroeconomic problem. Like for government, it is a problem. Government has to control it. For people, it is a problem because it reduces their standard of living. It reduces their purchasing power. It reduces their access to other commodities. I'll give you a lot of examples to understand this as well. Okay. It affects households, like aapke jaise mere, household firms, in order to make decisions. Like firms make investment decision on the basis of price rise. Government and financial markets. So both, all these 4, like the sectors, they make decision according to the inflation rate. So if inflation rate is moderate, it's predictable. You mention these 4. Okay. So you can write in your notes like this: households, firms, government, and financial market. So this is how you remember if you do this in your notes. Okay? In India, inflation is closely linked with food prices. So whenever food prices goes up, inflation is experiencing in the economy. Right now in 2025-26, we have seen good amount of agriculture production. So that is why the supply of food was sufficient. So that was not the case. That's why inflation is down, and it has been down since last 6 months. Next is fuel prices. Right now you can see war is going on, and because of supply shortage, fuel prices are about to rise or are rising. And you can say monetary policy. So monetary policy, where RBI makes or takes decision about how they control or maneuver inflation in the economy. Now these three areas are important. So you can use triangle like technology. So here you can say it's food, it's fuel, and it's monetary policy. Monetary policy. So this is how you can remember in your notes. Okay. For Indian economic service exam, this topic is important for both for theory and the policy based answer. Theory means direct questions will come, like what is the RBI's role in that. And policy based is if inflation is high, what RBI will do apart from monetary policy quantitative tools. Because in India, inflation is not able to control only by tools. Like you cannot cure shortage of potato by using repo rate. I hope you can understand. You need potato to solve the problem of supply side. So majorly you can say this is how RBI does that. Now here we'll see meaning and types. So inflation is continuous increase. Inflation is continuous increase in average prices over the period of time. So here the keyword is average prices. It's not in one commodity. It's not in one particular area. It's not in one particular time period. Okay? Average prices over a period of time. So it can be monthly, quarterly, 6 monthly, yearly. When you see economic survey, they publish yearly inflation data. When you see CPI inflation, RBI makes monetary policy decision on the basis of monthly data. So there are certain kinds of inflation. Okay, let's see. Creeping inflation, very slow rise price. Like for example, your tea costing 7 rupees, it goes to 8 rupees per cup, 10 rupees per cup, from 10 to goes 11 rupees. It means slight changes that will not impact. Like you go for a haircut, like for boys, haircut is not that costly unless until you go to some like good amount or good quality of parlor. But we can say, you can understand, suppose for example, the haircut cost 50 rupees. From the next month, it costs, suppose for example, 60 rupees. You will not mind it. Okay. So that's what we call creeping inflation. It's creeping. Okay. Then walking inflation. So walking inflation is moderate rise in the prices. Like for example, when you see milk prices are rising, vegetable prices are rising. This is moderate inflation. Although there are no percentage of inflation is defined for every category, but you can see according to the economy, we can discuss about these things. Like in developing economy, inflation is on the higher side in comparison to the developed economies or advanced economies. Walking inflation means here you'll find in certain necessities, you're facing increase in the prices. Running inflation, rapid rise in prices. So you can see school fees that is increasing. When you go to gym fees is going up, and the petrol prices are rising, food prices are rising. That's walking inflation. Galloping inflation is very high inflation, where you see everything is moving in the higher direction. So people lose confidence in the currency and they started moving towards buying gold, silver, where they can protect their wealth. And hyperinflation, we can say it's like a collapse, almost collapse, where people lose confidence in the currency. Like in the 20th century, happened with Germany, recently with Zimbabwe and Venezuela. So you can see extremely uncontrolled rise in the prices. So these types should be remember, and it should be important. You should mention that how these are effective as well and how countries are tackling this. Okay. So inflation may also be classified as demand pull, cost push, structural and imported inflation. In the next slide, we will discuss this if it is there. Otherwise, I'll explain here. Okay. So here there are now the causes of inflation. Number one, the causes. Okay. So excess of aggregate demand in the economy. Like for example, the pay commission in central government. Whenever they announce pay commission, there's a huge amount of cash received by government employees. They invest, they spend. So aggregate demand rising means for everything, I am demanding more commodity. For example, I am demanding a new smartphone because I have money in my pocket and I have received increment in my income, or I have high hopes that economy is growing, so I can swipe my credit card and I can get my new phone. Okay. Second is causes is increase in the money supply. So when money supply, it means people in the country are having more cash. So when RBI infuses currency, the money supply in the economy, the increase in the money supply can also cause inflation. Okay, like for example, where people are having money, they have money in their pocket, so they will demand more. Rise in the wages, again you can say pay commissions, or even in the private sector, if you get a promotion, without matching the rise in the productivity. That's again a cause of inflation. So suppose, for example, I am a manufacturer of this t-shirt. Now this t-shirt, the productivity of the labor is same, but since it is 1 year, so all the workers will ask for rise in the wages. And then if that thing happen without matching the productivity, inflation goes up. Increase in the cost of raw material, transport, fuel, etc. So if suppose, for example, diesel prices goes up, right now you can see LPG is in shortage in India due to ongoing Middle East war. Supply side constraints are also there. So here you see, if the cost of raw material goes up, again you will see inflation in the final price. Like for example, if I'm manufacturing this t-shirt, my wage rate goes up because of their appraisals, rent goes up, raw material of this cloth goes up. Then this 500 rupees t-shirt, for example, I have to sell at 550 rupees. So that's again increase in the cost of raw material translated into MRP. Supply bottlenecks in agriculture and logistics. So again you can say supply bottlenecks, for example, fertilizer shortage. In agriculture, storage problem is there. So these are the areas that you have to write in the answer. Okay, then only you will get marks. If you write points like this without an example or substantiate argument, you will not get marks. Okay. Imported inflation due to rise in the global prices, depreciation of the currency. These are the very simple thing. Imported inflation means, suppose for example, crude oil or LPG price rises. When LPG price rises, in restaurant, they will get higher, like they have to pay higher cost for the LPG cylinder. Then if they pay higher cost, they will increase the amount in the dishes. So they will increase the price of those dishes. Then obviously when you order from Zomato, again the price will go up. So that's what we call imported inflation. It means just because of LPG prices, you are also facing brunt of that. Okay. Next is depreciation of the currency. In simple sense, if suppose rupee is 90 rupees per dollar. So per dollar you have to pay 90 rupees. Suppose your payment is $100. If your payment is $100, total payment you have to do in order to import something. Now suddenly rupee depreciate to 95 rupees per dollar. It means previously for $100 you have to pay 9,000 rupees. But because of depreciation you have to pay 9,500 rupees. So again you can imagine that because of depreciation in the currency, nothing happened, no cost rise, nothing. Just your currency becomes more weak. You have to pay more. That's inflation. Fiscal deficit, where government spends, the aggregate demand goes up. Excessive government expenditure, again government induces that. So in nearby areas, the land prices, economic activity happens. That also create inflationary pressure on the economy. Okay. Now if you are preparing for this examination, I have a compilation of the strategies and how to approach PYQs, especially for answer writing. I have that ebook. If you want, absolutely free is there. So you can just text on the number given on the screen and below in the description. Now purchasing power of money falls. This is what happens. It means the same 100 rupee will not buy the same commodity, same bundle of commodity. Fixed income groups suffer the most. Like for example, I am a retired person. My pension is fixed at 20,000 rupees. Now inflation is going up. My pension will not grow. So fixed income people struggle. Like daily wage worker, they don't have the bargaining power every 6 months to raise their wages. Then they struggle. That's the problem. So price is rising, wage remains fixed. Okay. Poor households are badly affected when food prices rises because this is the necessity. Like in middle class, if you are getting food and you are affording once a week a restaurant visit with your family. So in a month you are visiting restaurant for the 4 times. But suppose, for example, because of inflation, cost of living goes up, then you can cut down the restaurant visit from 4 to 2. It is possible. But poor people, they have to cut down on simple basic necessities. Savings lose real value if inflation is high. So you are putting money in the bank account. The bank account is giving 3 to 4% interest rate on savings, or if you make FD, it can go up to 6 to 7%. This is a nominal rate. But if inflation is 10%, it means you are losing value. Investment decisions become uncertain. People are not able to take proper investment decisions. Like, if I invest this much, take loan of this much, after 10 years, how much my earning will be. So if inflation is unpredictable, it's again difficult. Inflation may redistribute income from creditors to debtors. Suppose I have taken a loan at a fixed interest rate. After 10 years, the same amount of money that I'll be returning to them may reduce the value of the original principal as well. For example, I have taken a loan of 10 lakh at 7%, for example. So it means next year I have to give 10 lakh plus 70,000, that is interest. Now suppose the inflation is 10%. It means the same money will value less. So it means 10% inflation, I have to give more money, but that exactly the lender will lose in this particular case, and I as a borrower will be at the advantage. So persistent inflation weakens macroeconomic stability in any economy. So macroeconomic stability is important, and that is why persistent inflation is there. Then RBI and other monetary institutes, if they fail to control it, then macroeconomic instability can arise. Now, how control of inflation in India can happen? Like, for example, repo rate, they decide policy rate. So if repo rate goes up, your EMI also increases. So EMI amount remains same, but the tenure fluctuates. If you check your loan account, EMI amount remains same, but the loan tenure can shift according to the inflation or repo rate. CRR is the amount cash reserve ratio, where banks have to keep certain amount, percentage amount with RBI. So if suppose, for example, this is 3%. So if bank is having 100 crore, 3 crore they have to keep with RBI. If RBI raises from 3 to 4%, it means 1 extra crore they have to give. Less liquidity. Vice versa, if you reduce it. SLR is liquid funds. Bank had to invest in liquid funds. So that is again, if you fluctuate that changes the inflation and liquidity. Open market operation, because repo rate, CRR, SLR, they all are good when there is a problem from the demand side. But what about supply side? So sometimes open market operation, where RBI directly go into the market and trade with government securities. So for example, in the market, if there are like excess money supply, so as an RBI, what I'll do is I'll issue bonds of 2 lakh crores and float in the market. So people will invest, financial institution will invest, and the extra cash that was going on in the economy, RBI can suck that easily. So this process, buying and selling of government securities, is called open market operation, OMOs. Fiscal measures, rational public expenditure like tax changes, reduction in deficit, these things also help. Like for example, if you reduce income tax last year that government has done till 12 lakh, you don't have to pay any tax. So it means extra purchasing power. So when you have extra leverage, you will spend that. Again, inflation. Administrative measures like anti-hoarding action. Like for example, recently, commercial LPG cylinder. The shortage is not that high, but the hype is high. So people are creating artificial scarcity by hoarding. Buffer stock release. So when government think that wheat is in shortage, government release that buffer stock to maintain the supply. Import facilitation. So if domestically it is not available, you import from abroad. Okay? Edible oil government generally do. Supply side measures are important in food inflation. So that is quickly relaxes the prices. Now inflation control requires coordination between RBI and the government. So monetary and fiscal policy should go hand in hand. If it is going like apart, then obviously the coordination will not happen. The same thing happens in European Union because they have one monetary policy and different countries are having their individual fiscal policy. That is why they struggle. Okay. In India, inflation is not only a monetary issue but a supply management issue. So it's not just money. And RBI has a big task. It's supply side management, it's fuel, it's imported inflation, it's supply side constraints like the cost side, the demand side. So there are so many things. So as RBI, this is a very important duty. At the last, I would like to remind you about the psychometric test. It will take 10 minutes, but it will give you 360-degree view of your preparation. Okay? Apart from that, the answer writing ebook you can take on this number if you are interested and serious about the exam preparation. The report you can share with me and we will connect directly with you. Okay? Make sure you subscribe this channel because this is the first video within our 100 days series, 99 more to come. So make sure you follow that, subscribe and share it with your friends so that they can also take the benefit out of it. Thank you and have a nice day. See you tomorrow. Jai Hind.